Hi, I'm Udai Turaga, founder and CEO of ADI Analytics. We are a boutique research and consulting firm focused on oil and gas, energy, and chemicals here in Houston. I spoke at the OCTG Summit last week where I shared ADI's outlook for the US midstream oil and gas space, and I thought I'll share some of those insights here with our audience on LinkedIn. The US midstream sector is entering an exciting growth phase. We are seeing a significant amount of capital that's going into new pipelines, natural gas processing, NGL fractionation, natural gas storage, and export opportunities. We are forecasting over $50 billion in new capital investment in the next few years focused on the US midstream sector. A lot of this is being driven by three powerful demand drivers. First, LNG exports are surging. We at ADI keep talking about the natural gas supercycle, and we are seeing that coming to pass. At least 6 BCFD of incremental natural gas, feed gas demand is expected for LNG over the next few years. A second big driver is an incremental growth in 5 to 8 BCFD for gas demand for power generation because of AI data centers. Finally, we continue to see strong demand for hydrocarbon exports out of the US into Europe and Asia, and that'll drive significant investments in new midstream infrastructure. Collectively, we are seeing projects being proposed to expand natural gas pipelines in the Permian. We are seeing new investments to connect up to export terminals, essentially for crude oil exports. We are seeing a lot of new interest in natural gas storage assets. And finally, we see new investments flowing into expansion of NGL fractionation capacity. Collectively, all of this is significantly ramping up capital spending. Capital spending, is something that we have been forecasting for many years on midstream. Over the next few years, we expect at least $50 billion to flow into the U.S. midstream sector in new capital spending. Fortunately, a lot of this is underpinned by fairly strong contracting discipline, and therefore we expect the health of the midstream sector to be fairly robust. Some of this capital spending could be at risk because of steel tariffs, which now are at 50%, and therefore that could have an impact on the overall cost of these projects. But we are seeing midstream companies being fairly creative in terms of the way they approach this capital spending. For example, we are seeing some of the midstream players pre-buy steel in order to kind of avoid some of these steel tariffs. A final supportive factor is regulatory and policy support, which has improved significantly in the Trump administration, essentially through expedited permitting, rollback of certain environmental restrictions, and then reforms to streamline permitting at multiple agencies, EPA, FERC, guidance around NEPA, for example, and PHMSA as well. So in summary, the midstream space is poised for dynamic growth. We're going to talk a little bit more about these topics at the ADI Forum, which is our firm's annual conference. It's coming up at the end of January, and the best prices to secure a spot there are available now. So head over to adi-forum.com if you'd like to learn more. And then also take a look at our firm's website, adi-analytics.com, if you'd like to see how we help clients that are trying to navigate the midstream space.